So once again, good morning, everyone. Thanks for being here. I do appreciate it a ton. What we, what I wanted to do today is take a little bit of time, and we're going to continue this. Okay, I don't want you to think this is the only one of these we're going to do. I want to take a little bit of time and really dive into these price patterns that we trade and work on. And you guys saw one of these price patterns. We called this trade here when it broke out of that price level. And you guys know that price pattern is a pop out of the box pattern. And you can see that this pop out of the box pattern was just about perfect. Okay, they don't get a whole lot better than this. So let's talk about this price action in here. And the last two signals here on Apple, this one I didn't take, this one I did. The last two signals here on Apple are the two basic price patterns that I trade. Now, I trade these patterns over and over and over. And what I want to do is kind of go into some of the details, why these two price patterns work so well, and why it's important to watch for them and pay attention to those ahead of time. Not be chasing them, but pay attention to them ahead of time. So let's take a look here and kind of dig into this price pattern a little bit. And I'm gonna jump screens here in just a little bit. But essentially this pattern right here is the PBO pattern, right? There's our pullback opportunity. And we know it's a PBO pattern because what's this chart doing? Number one thing, the stock is trending. So we have a trend and we're watching and paying attention to that trend. That trend is staying consistent. I want you guys to take a moment and just notice how deliberate the price action of this chart is. It's not whipping all over the place, right? That pattern is not just throwing in all kinds of big whips and weird price action in it. It's staying pretty consistent. There's upward pressure on that. And those are the things that I want to watch for. If I'm looking for a trade either up or down, I want to see that nice, concise, consistent price action. Now, we all know in a down move, volatility plays a role in that, and we get a little bit more craziness in a down move. But in up moves, if you find those consistent price patterns, they just work out really, really well. So in this chart, and let me delete some of this stuff out here, but in this chart we have some really nice clues for this last potential trade that was really handy. First, you can see I marked this price resistance in here. And it really was more based on this high right here in that swing high, but we popped through that and then notice that we just settled back testing that support. And that's a pretty common price pattern, right? When we're looking at price action in a chart, that's what a stock will normally do. Buying and selling in stocks is all about that breakthrough and retest and breakthrough and retest and failure and retest. Those are the basic price patterns of the market. And if we can learn to identify when those patterns have changed to the bullish side or to the bearish side, there's great money to be made. And we don't have to do a whole lot of speculating. This didn't require anything to find it other than having a dedicated watch list and reviewing that watch list and setting an alert. That's all that required. It didn't require anything fancy in any way, shape, or form. Just waiting for that trade to occur. Now, I know a lot of you have already taken profits on that trade. Nice profits, really quick trade, long weekend ahead. Nothing wrong with doing that at all. Okay, but you can see that if we're disciplined to a few patterns, we can really exploit them and take a lot of advantage of it. So let's take a look at some of the details here. First, I want to describe or detail out that PBO. So when a pullback opportunity occurs, first, obviously, we want to make sure we have that trend in place. Okay? It is really, really important to take a look at the trend itself. A trend like this is obviously gaining so quickly, the chances of a failure at any time wouldn't be a big surprise, right? The sharper that trend goes, okay, the more volatile that stock probably is, the bigger price candles that are probably in there, and it just exponentially increases the challenge in a trade like that as we start stretching those trends out. A trend that's flatter with concise price action, they're easier to trade. They may not be those trades that are going to make you a bucket load of money on one day, but they're going to be those trades that you can enter and stay with for a little bit of time and make those nice swing or position trades. So we want to look for those trends in here, and we want to recognize the type of trend that it is. If it's too steep, if it's really, really nutty, then we've got a problem with that trade. Now let's take a look at a price pattern here, and I want to use why can't I find, there it is. I want to use a price pattern here that is the PBO or something like the PBO. So if I were looking and the stock has moved up, okay, and that price pattern moves up, and then we start to see that pullback. That pullback begins to occur in the trade. Now, what you're going to want to pay attention to is the size of the candles. Okay? The candle size is important. If we're moving up with really strong, long candles, okay, we have a lot of momentum in the chart. One of the things you want to pay attention to is if a chart or if a stock increases the length of its candles at the top, they call that exhaustion, okay? All of a sudden, everybody that's going to get in gets in. You know, what this is those stragglers, those people that are chasing the trade. Anybody ever admit that you were part of that big candle? Oh my gosh, I'm missing out. I got to jump in on that candle. And we chase into that candle right before the pullback. Yep, fear of missing out. That's exactly right. And that, we want to pay attention to those candles. What are those candles telling us? Now, in the same breath, if you see candles that start off big and then slowly start to diminish to the top, our momentum is running out. It's showing us that we're running out of energy. Okay? Now, the rule that I use, guys, and you all know this, well, I think you all know this, but I think it gets ignored a lot because of this, well, I don't want to call it, I just want to call it that emotion that gets in the way. And we want to see what we want to see in a chart. We don't want to believe that we could be wrong. Okay? So the rule that I use is if a stock is up somewhere between 5 and 7 days in a row, there's no chance in the world I'm going to be considering that for a buy. Okay? What I will be doing is watching and waiting. I will mark up that chart and I will watch and wait for that pullback to occur to offer me another entry into the trade. Okay. Now, the method that I use here of trading, and remember, one of the primary rules that I work with is I always buy stocks at or near price support. Okay, always buy stocks at or near price support. Now, price support can be the trend. Price support can be price action. Okay, that price support that we saw there on Apple. This first one was definitely just trend, right? The stock pulled back in a PBO. And then what happened down here is we ended up getting some real small candles. And they didn't look like that, but we got some really small candles. Now, if you move down in a few candles that are really, really strong, you approach that trend and all of a sudden, all of the selling just kind of goes away. You get a little bit of resting little doji candles. That's a clue to me. And that should be a clue to you. A clue that we want to take our chart, we want to place an alert on that position so that we can wait for that next trade to occur. So you guys know that I would look across here and I would look for a place where I can get a good connection with candles, and I want to place that alert in there. Now, this is me, and it doesn't have to be you, but once I place an alert on a chart, I'm pretty much done looking at it. Once I've identified that pattern, I just let the software bring me the trade. Okay? I don't have to do anything crazy. I don't have to watch it. I don't have to watch those candles wiggle around. And as a matter of fact, I don't want to. Because what happens if we watch this and we're thinking, oh, a trade's going to come in this, a trade's going to come in this. Anybody ever talked yourself into a trade before the trade occurred? Talk yourself into this trade. Oh my gosh, I'm going to miss out. I love this pattern. This has got to work. And you buy that trade and it does this. Right? So we don't want to talk ourselves into that trade. We want to let the trade come to us. Okay, so I place alerts like that and I wait for the trade to trigger. When that trade triggers, and it may not look like that, it could look at, it could be bigger, it could be whatever it is, but I'm waiting for that trade to trigger. Now, one of the things that makes this work, guys, is we've got to get comfortable with the idea of buying stocks at or near price support. If you can't get comfortable buying a stock here, a stock that's already trending, we know the trend is working for us, okay? If you can't get comfortable buying a stock here, and this is a mistake that I made over and over and over in my trading, it was so hard for me to break this habit. I would see a candle like that, I would know that's what I should do, but I would look over here and say, well, this is price resistance. I can't buy that. And I would ignore my rule of buying at or near price support. And so the stock would move up, and I would finally make that decision to get into that trade right before the stock pulled back. Okay, so I'd be in the trade one day or whatever, it would move up and then pull back, and I'd end up getting stopped out on the trade for a loss. Okay, so what we want to do is we want to look for those trades first that are trending. We want to look for that consistent price action, concise price action. We want to look for those trends and how that price action is actually putting itself together. When we see great big long candles at the top, we know great big long candles after a multi-day move is probably getting closer to exhaustion than anything else. So we don't want to chase that big candle up there because the chances of a pullback are escalating. The odds are growing. Keep that rule in mind, 5 to 7 days. If you see 5 to 7 days up, you want to back off and wait for the next entry into that trade. And we've all seen stocks that will take off, right? They just take off and run. And they just go and go and go and go and go. And we all look back at those and go, oh my gosh, why didn't I get into that trade? I'm so stupid and all those kind of things. You guys know that these are rare, right? These don't happen very often. Those don't happen very often. And if you happen to catch one, awesome. But don't chase that mess because it's likely to get you in trouble. Okay? So let's take just a quick second and let's go back now and let's study that price action here on Apple. And by the way, this is something I did for years and years and years. I would go back and forth in a chart looking at that price action. Notice that we had that pretty big candle up here. That candle stretched out, zoom, and it slammed into this price resistance area. We had price resistance right in here, and that price resistance carried back in through here. Okay, so we had this price resistance that the stock was dealing with, okay, on that move up. And zoom, we popped up, slammed into that, and notice that the biggest candle in this price move was the one at the top. The biggest candle in that whole price move was the one at the top. That's that exhaustion move. That's why you don't want to chase that many days up in a row. And by the way, if you're up and have a black candle here like this, I don't I get this all the time. Well, it had one down day. I have to start the count over. Now wait a minute. Let's be honest here, okay? Does that count as a down day? It was a down day in price, but did it lose this price action move? No, it did not. So all of these candles get counted into that run. Okay? The last part of that move was that exhaustion move. And this is what I would do all the time. I would see that, oh my gosh, I'm missing out. I would buy this thing. It would pop up the next day and I'm thinking, woohoo! And then by the end of the day, I'm down here and I'm stopped out somewhere down in here because I can't take that much risk on the trade. Okay? But notice after those 3 days of pullback, look what happened. We had these little doji spinning top candles, that little resting pattern. All of a sudden the sellers dried up. The sellers just stopped. They were no longer there. So I placed this alert waiting for that trade to trigger. Okay. And by the way, count this out. 1, 2, 3, 4, 5, 6, 7. Isn't that amazing? 1, 2, 3, 4, 5, 6, 7. This went 8, 9 days. Five to 7 days works really well most of the time. 1, 2, 3, 4, 5. I don't know why, but it does. Now, take a look at the angle of the moves. This move right here, do you guys think the odds of chasing this were pretty poor? If you didn't catch this or weren't already in this trade down here, the angle of that move, do you think that was kind of a poor risk to chase that trade? Because look how steep it moved away from the trend. Kind of poor odds on that move. So we need to wait for the next entry into the trade. Don't chase that move. Notice that this one was much more subdued, kind of followed along the trend, stayed above, but didn't really escalate too big until right there at the end where we had that exhaustion move. Buyers just got all wore out all at once, and then profits started to be taken in that trade. So there's your position, there's your entry into that trade. Your stop loss on this trade is very close. Now, people will ask me all the time, what's a buy signal? Well, you can see, would that be a traditional buy signal there? No, not at all. That would not be a traditional buy signal. Okay, so you would have to determine what's more important to you, that candle right there, or the fact that you identified this pattern and want to enter that trade. That the trend has stayed consistent. This pullback was clean and just like we want to see them. I can enter those trades sometimes. And particularly if I'm confident in the overall market, if I believe the direction of the market is strong and bullish, I can take those trades. Okay. And the thing is, I never know if a trade is going to win. All right. I know that seems to some folks, they want to know the trade is going to win, right? I never know that. We never know if a trade is going to win. So I want to take the trade that has a low risk entry. So if I'm entering this trade here, my stop loss is here. Would you guys call that a relatively low risk entry? Particularly on Apple. It's a pretty low risk entry into that trade, right? If I'm wrong, and I can be wrong just like anybody else, if I'm wrong, I don't take a big hit on that trade. Okay, so I'm always looking for that lower risk entry. Now, the pop out of the box pattern kind of went over the PBOs. And by the way, the PBOs, this is really important to me. I either want to see that PBO pulling back and that price action becoming small and concise over toward the trend. It may not be 3 spinning top dojis, but something like that. I want to see it small, concise. I want to see that selling pressure fall out of that trade. And then I'm waiting for the buy signal. On the pop out of the box, I want to see that pop out of the box occur somewhere around a support or resistance level. You will often find the pop out of the box pattern either after a breakout and we're holding above a price support, or just below the price resistance and it's trying to build pressure to pop through. Okay, all those buyers are pushing and pushing. There's no sellers in there. Now, the reason I like this pattern is obviously one of the same reasons. First, I'm buying this at or near price support. Okay, I'm buying a low risk entry trade in this position. And I like the fact that it moved over to trend. So one of the things you want to pay attention to in a pop out of the box pattern, and this will happen a lot of times, is you'll get that move up, pull back, little pull back, and you'll get an entry signal. Now, it's okay often in a pop out of the box pattern to take that entry signal, but at this point, is that a pop out of the box pattern? The answer for me is no, that's not a pop out of the box pattern until we get at least 4 days of consolidation. Okay, and I'm not going to count this candle. So 1, 2, 3, 4. Okay, we're not a pop out of the box pattern until we get at least 4 days. Now you can have what's called a mat hold pattern, which is a 3-day pattern, but the pop out of the box is usually 4 or more days. And the reason I can be patient for that trade is because how consistent this stock has stayed in its trend, right? It's reacting to its trend. So if I wait and I'm patient, all I have to do is wait for it to move over toward its trend to see if those buyers come in. And sure enough, that's what happened. That popped out. I sent out that trade. Bang, we get a nice quick entry on that position, a low risk entry on the trade. And I know a lot of you guys have taken 12, 14, 15+% out of that trade in just 2 days. So Simple trade, simple entry into that position. Now, we have to look at the price candles in this as well. Okay, we have to watch that price action. If we go back to my black screen here and we see that trend is in play and that stock has been moving up, doing what we need it to do, but this time it's chosen to do little teeny tiny candles in here, moving sideways over to a trend. We get that 4+ days of rest in here, and then we place that alert on the chart. When we place that alert on the chart, we want to look for some kind of a topping connection, some place where either the wicks, the bodies of the candles, something connects up in there and gives us that nice little place where we can see that there are no buyers at this time above that level. No buyers. Okay, that's what we're looking for. We're looking for that place where there aren't any buyers up there, but we also want to notice the fact that there are no sellers below, right? So we have no sellers down here at the bottom. We have no buyers up at the top. And I want to see that price action stay concise, consistent. It's just marking time, moving sideways. We're looking for more buyers in this trade. The reason we're looking for more buyers in this trade and the reason we're looking bullish on this trade is because this stock is trending, right? We have a trend. So we're thinking bullish. Now, if this were a trade that suddenly had a price spike, let's move it over here, that had a price spike that moved up like that, am I going to be all that interested in this trade for a while? No, probably not. It broke its conciseness. It broke its pattern. All of a sudden, we probably have reached an exhaustion point, which means we could suffer a larger pullback or a very long choppy, winding consolidation. We've seen that, right? Where we get that move at kind of the end, it just boom, it blows up, goes up there. Everybody sees that same stock at the same time, kind of blows up. I don't want to be chasing that. I want to wait. And this one requires a longer wait. So for example, if this one had a trend out here, and that moves up like this, and this consolidates 4 days like this, I'm going to have to be really, really liking the market before I take that. Because I know this could give me that false breakout, that false pop, and then turn around and do that. Right? So I'm going to have an exceptionally good entry here with low risk on that trade if I'm going to take it. And it's possible that a stock can move up from there, okay? Because a stock can change its trajectory, right? In a trend. But just know, if you get that big spike away from a trend like that, chances are this first entry signal is not going to be the good entry signal. Okay, it's just moved too far too fast. Just think about all of the moving averages that just have to catch up. So this stock, have you ever seen a stock that just moves so far away from its moving averages, it's just kind of ridiculous? And when that occurs, it just takes time for that to rest and pull back so those averages can kind of catch up. Because there's not going to be too many people that are going to race into a trade that's so extended in such a short period of time. Okay, there might be a few buyers chase in, but it's not going to be enough normally to sustain that move until all of that stuff, all of those averages kind of catch up. Is that making some sense, guys? You guys finding this helpful? I hope so. This comes from that true study of price action and looking at all of those candles We cannot just look at one candle and say that's our price pattern or that's our entry. Our entry is based on the grouping, what this chart is doing, the overall condition of the market. Okay? So we have to look at the price itself. We have to look at that pattern. Now, you guys have seen me do this after about 4 days in. If I got a price that popped up in here away from the trend a little bit, trend, we haven't made it over to the trend, sometimes I'll take that trade. Okay? Because we all know a stock can sometimes take off early. Okay? Just before it reaches that trend, I'll take that trade. You've also seen that sometimes I get punished on that. Then it pulls right back down into here. We move sideways until we finally come over, and then it goes. Okay? Here's the good thing about that pattern. Normally, if you found a good quality pattern where there's no sellers under here, your stop loss is held. So here's the scenario that you got to deal with. If this is your trend and the stock moves up and you move over 4 days, and we're still a long ways from our trend over here, and you buy that pop that pops up here, you want to consider the length of time that it may require for this to come over here, that it may still come over to its trend or pull back to its trend. Okay? It may need that rest. You got that initial pop in that trade. There was a few buyers that rushed into that, and you might have been one of them. That's okay. Just realize that the farther away you are from that trend, the more likelihood you may have to hold or wait in this trade to move sideways to reach its trend. I don't know why, but it happens a lot. Okay? Now, as a stock moves closer and closer and closer to that trend, if I haven't got the pop yet, you guys know that I'm going to be watching this really, really closely. If it moves up in here, pow, I'm going to take that shot on that trade because my stop is close. I'm hitting my trend. We're getting that price reaction. That's where I want to get in. Okay. That's where we want to be in the trade. Okay. I answer that question. I want to stay on this subject, Richard, but why do we trade stocks that are 60 days or have options that are 60 days out so that we can give ourselves some time? How many times have you been in a trade that the stock moved up? You were right on the position, okay? And there's nothing wrong with this trade. If this could do another consolidation and keep moving up, you've got more money in the position. Why do all of the effort of the price analysis and time analysis in the trade and not give yourself an opportunity to really make some serious money on the position? The second reason is, what if the chart, you buy this chart in here and it just has to go sideways for another week and a half? We don't want to be in an option that's getting into heavy theta decay. We know anything 30 days or less, theta is increasing. Our decay rate is increasing. So if you can tell me that you're exactly right on timing and direction every time you take a trade, take any option trade you want. But I don't think anybody in here can tell me that they are directly or perfectly right every time on timing and direction. Have you guys ever seen this? Here's another good example. Stock moves up. Okay, and it does its nice consolidating move over here. And then we get that pop in this candle right here. We get that good entry into the trade and it holds up. It does really, really well. And then the next day it does this. And then for the next week, it moves back to trend. We barely got any move in it. And if we take too short of a trade, we miss this opportunity here. It happens a lot, right? You get that big pop all of a sudden, but then it still has to pull back and consolidate back over to the trend. So we want to give ourselves enough time to be right. Give yourself enough time to be right. If you shortchange yourself on time, you're going to always be in a position where you're racing against the clock, racing against theta decay, and theta is relentless. If we have something 60 plus days out, then we don't have to worry about that theta. We've got time. We have very little decay in these options during the period of time that we're in that trade, rather than always fighting that decay. Okay. Let's take a look at another price action thing that's happening a lot right now. And when you guys have heard me talk about this several times, but we have that stock that's trending, and the stock has done what we wanted it to do. It's moved up here and giving us that nice price move. We might extend just a little bit, and then the stock gets a pullback. Okay, we start seeing that pullback in the trade. It moves down fairly sharply. Okay, we've all seen this lately where all of a sudden we get this bullish candle right here. Okay. The majority of these candles right here are being sold into. I don't know if institutions have figured out some kind of an algorithm here or something, but they create that pop. We get that move up right here after a fairly substantial pullback. That first candle will pop and we jump too soon on that trade, and then the stock goes ahead and pulls back into the trend. Okay, and we have to watch and wait for that to occur if we're going to stay with that trade. And that's happening quite a lot nowadays. I look at this level right through here when I get that pop. And a lot of times you'll find that there's a connection between the bottoms of these candles and the tops of these candles. And if I place an alert right above there and wait, I can catch that trade in here. Okay. We've seen that a lot in these price patterns. I've shown you guys that pattern a lot. And that's something to watch for. It usually is going to occur just close enough or just a little bit too far away from the trend to give you a little bit of pause. But if you're a hard right edge watcher, if you're always watching that hard right edge price action, what we do is we tend to jump. Oh, there's my signal. I'm missing it. That's a bullish candle, right? Piercing candle. Hey, we want a piercing candle. And then we jump, but we fail to recognize the overall pattern, the overall trend. If you believe in trends, if you believe trends work, then we want to wait for those trends. Okay? We want to give those trends time to work. Okay? Let's take a look at a trade that I'm in right now to kind of highlight that a little bit. And I'm sorry, guys, I'm going to have to cut this off here in just a few minutes. But let's take a look at AMD. Now I'm going to look at AMD on a daily. You guys know that I'm managing this based on a weekly chart. And you know my weekly chart is just that beautiful pattern, beautiful trend. Everything is holding in there. Okay, but if we go back to that daily in here, notice that this pullback into here got this big spiking move. All right, and we want, oh man, I want to get in that trade, right? I want to get in that trade. But notice that's when we hit that exhaustion point. We got that fairly substantial pullback. Okay, and see that candle right there? How many folks, and I saw posts in the room on maybe buying that candle. But see what I mean? How that will occur very near or just far enough away from the trend that then we have to set through this. It's okay to probably buy it. Notice that the price support here is held. The price support is held. If you're in that trade, fine, but you're going to have enough time on that trade because this could go sideways for another week and a half. And all that's doing is building some energy to break through this price resistance. That's all it's doing. It's resting. It's building energy. How do I remember? I don't know. It's pretty easy because I plan my trades, Bill. My trades have a plan. And this one's really easy because I bought a leap option. I bought a long-term. My option goes to January 2020. Okay. Linda, that's a good idea, and I see people do that from time to time. You can take, if you're using TC2000, let's say you enter this trade, okay? You enter this position, okay? And by the way, let me show you the mistake that I made on this one. I entered that trade right there, okay? So, mistake? Well, just what I talked about. I entered that trade with that long-term idea, and I had to wait for that trade to come back to trend. Okay? Just like you, I got caught in that position. There's that buy signal, then we pull back, and we don't really start moving up until we come over to trend. But I didn't want to miss it, just like everyone else. But notice that where I had my stop, below that price swing, my stop held in the trade. We talked about that several times. So now I'm up about 60% on this position. Okay? And we'll talk about next week. We'll talk about, because I've got to have to make some decisions here based on earnings, right? Coming up. I'm going to have to make some decisions. And we'll talk about this next week on how I'm going to deal with those earnings, that earnings report, how I'm going to hedge around it, how I'm going to protect myself in this trade. Or I could just take the 60% gain and walk away. Nice situation to be in, right? Okay. But if we go back to that daily, notice that the stock is doing just exactly what we've been describing. Okay? How is that stock finding its way over to the trend so commonly? It has to come back to that trend. I don't know why, and I don't care why, but it happens over and over and over again. So if we're patient, if we wait, if we don't chase, if we study the overall picture, studying the price action, studying the PBOs, studying those consolidations, and how it relates to the trend and how it relates to support and resistance, we make better decisions on our trades. We get better entries. Okay, so we're going to continue this, and I know this probably generated quite a few questions from folks. And I want you guys to know that this stuff was learned over a long period of time. This stuff was learned by me pulling a chart back in time. Okay, I would pull a chart back in time like this, and I would move forward. There's my downtrend, and I would move it one day at a time forward. And I'm looking for the entries. And literally, I would spend hours doing this. One day at a time, watching the price action, following my rules. I cannot buy this until it breaks the downtrend and holds it as support. That's why I can't buy this. Because couldn't this have been a lower high right here? I know a lot of you are looking at this and saying that's a buy. It's not a buy for me. We haven't broke the downtrend. And that failure right there could have turned into something really bad, and this could have drove all the way back down to a new low. That's why I follow rules. And I would take those trades one day at a time, moving forward, looking for those price entry points. So break the downtrend. Now show me that you can hold it as support. There's a buy signal. Break the downtrend, hold it as price support, Morningstar pattern, buyer stepping in. And I would go through charts back and forth and back and forth and back and forth, studying each individual candle and how those patterns developed. It's not about just that one candle. It's about the entire picture. Okay? So we'll have a lot more discussions on this. We'll talk more about buy signals and patterns like this. But hopefully you got something out of this, something that you can really sink your teeth into, do a little bit more studying, a little bit more evaluation of that chart. All right? Everyone take care. Have an awesome day. I'm sorry I've got to run, and I'll get this video up as soon as I can. It probably won't be till Sunday or Monday, but all right. Thanks, guys. Have a great holiday. I appreciate you a ton. Everyone take care of yourselves, and we'll talk to you very, very soon. Have a good one.